Hi guys, good afternoon and welcome to the CNBC-TV18 Newsroom. I'm Pavitra Parekh. You're tuned into your stocks and we have a lot to get to. But first, a quick look at the markets. They have come off a little bit, but we're still holding up with a gain of around 160 points. There you have it on your screen. So almost 1% higher on the Nifty. And we've been, pretty steady all through the day. There hasn't been any major dip that we've seen. Even the banks, which were struggling a little bit, did see that move higher. And now we've lost a little bit of steam once again. But it is still an over 260 point kind of move that we're seeing on the Nifty bank. So really nothing to complain about. It is a good looking screen. So let's go ahead and invite both of our market guests on the show today. We have Vijay Chopra of EnochVentures.com joining us now, as well as Rajat Bose to answer all of your stock related queries. We're going to give you a complete technical as well as fundamental perspective. So I'm sure that will be, useful to all of our viewers. Rajat as well as Vijay, thanks a lot for joining us and, taking the time to take our viewers through all of their queries. The first one comes in from Ashok Srivastava. He writes to us from Mumbai. He says that he holds 20 shares of Maruti at 8,000 rupees a piece and 100 shares of Zomato at rupees 150. Now, he is, of course, making big gains on his investments in Maruti, but we know the story that has played out with Zomato. So he wants to know whether he should stay invested in these or he should just sort of get out and book his profit or loss in both of these. So, Rajat, let me come to you first on this. How are you looking at it? Of course, Maruti has done exceedingly well. The company's management also spoke to us earlier after their strong earnings. They're sounding extremely optimistic. So, take us through what you have to say on Maruti. And then, of course, stark opposite, you have the new age Zomato.
Well, regarding Maruti, what I would like to say is that perhaps the market anticipated the kind of good performance that Maruti has shown. And last Friday, there had been a very big move. And after that, today's move is, at least what I see is that there is some profit taking. And unless it takes out 97.50, around that level, I think that today's high was made. 97.70 was the high. 97.50 to about 97.70, this range needs to be taken out. Otherwise, this movement we have seen that 1,000-point rally from 87.50 over a period of last 5 sessions, there will be profit taking because the kind of chart formation suggests that over the next few sessions, if it fails to take out 97.70 again and sustain there, then it might come down to something like 9,400 to about 92.50. And regarding Zomato, I would say that Zomato actually at these levels, if somebody is willing to hold on for a pretty long time, then it is a good buy because it is consolidating at lower levels. But I would be, I would say a long-term buy call would come only when it takes out its 200-day moving average, which is around say 78, 80 kind of levels. If it sustains above 80 and whenever that breakout happens, Pavitra, at this point in time, Zomato, being Zomato, I'm not expecting it to cross 80 because the volatility in the market is not that great. So breakout trades are very unlikely. But definitely a move towards 70 in the short run can happen. If that happens, expect some selling. Otherwise, if one is actually a long-term investor, some long-term investors have actually taken a lot of big positions here. So, and there is very little downside, at least at this point in time. It is a good buy over the long term, but not exactly a short-term play.
Yeah, I can imagine you wouldn't want to trade a stock like Zomato. And remember, the life high for this stock was around 169. It's currently at around 62 rupees. So, like Rajat said, maybe the downside has already been hit. Vijay, let me come to you as well on this. First, I want your thoughts on Maruti because, like Rajat was pointing out, it has rallied a lot already. So, do you think that much of it is already in the price, or do you think even from these levels, we could see significant up moves?
Well, the reason why Maruti moved up was, stupendous numbers during the festive season. Secondly, last year we saw a price rise happening in all the cars and all the models. But again, last year the metal prices were pretty high and the metal prices correct from there on. And we saw a correction of about 30-40%. But the car prices never came down, so they're never downwardly revised. So that is the reason why it is showing such huge profitability. I think that booking profit is a good idea at these levels. And if at all you get it again at around 8,800 or maybe 8,700, it would be a good entry point again. But as of now, I think that profit should be booked. So you want me to talk about Zomato as well?
Yes, of course. Please go ahead and tell us about Zomato as well. You are suggesting that we book some profits in Maruti. That's fair. But what about Zomato? That's a whole other story.
Yes, it is. And, I think on all the business channels, wherever I go, people were asking me about the new age companies when they were getting listed. And I was very bearish because the kind of valuations these companies were commanding at that point of time and the kind of hoopla and the euphoria which was there in the markets, I clearly said that, don't get into these companies. But again, now it's a different story. Post the correction, I think that, stocks like Zomato, stocks like even Paytm, stocks like LIC, these stocks have started looking good. But again, I completely concur with Rajat sir when he says that it's for the long term. If somebody wants to get into the stock for the long term, it's not for a trading bet. So it probably can go up to 80, 85 levels. And there are good chances that if somebody holds with 12 to 18 months perspective, this kind of numbers, this kind of level, we can see in Zomato. So I'm at these levels fairly bullish with a longer term perspective. But in the shorter term, you might see that it's consolidating or coming down. The markets are going to be in a tizzy for some time.
All right, at these levels, quite bullish. Unfortunately, our writer has sort of bought it at 150, so that's rather expensive. But, like both of our guests said, you could perhaps hold on for a bit and then you could trim your losses. So that's the view coming in on Maruti as well as Zomato. The next one, we have Samiksha Khurana writing in from Pune. She says she holds 150 shares of Adani Power, bought at 100, and 10 shares of Nykaa, bought at 1,500. She's a long-term investor and wants to know what to do with both of these stocks. And so let's actually pull up both of them. We have Adani Power, which, Rajat, this one, looking at the charts, has just been a wild ride, right? I mean, the kind of returns that you've got on this, for say, if you even this year, it's been an over 200% kind of up move that we're seeing on Adani Power. How would you look at it?
Look, Adani Power at this point in time is in a downtrend. I mean, if you look at from a short-term perspective, from a medium-term perspective, it is in a downtrend. But if you look at the long term, then it is still maintaining its bullish uptrend. And it is still hovering above 280. That is the 200-day moving average. So I wouldn't suggest that you buy afresh. But if you are holding it, then still stay put. But if it were to fall below 300, then expect the 200-day moving average to be tested. But still such time, no fresh buying is recommended in this.
All right, no fresh buying recommended, but you can perhaps hold on to your positions. The stock is currently at 330 a piece. Rajat, what about Nykaa? We have another new age company there. And of course, our viewer is making some losses on this. All-time high for Nykaa was at 25.74. So it's come off significantly from that at around 1,080.
There is a recovery today. This recovery is happening actually
because the lock-in.
There is a phenomenon called regressing to the mean. I mean, regressing to the mean, I'm talking from a technical point of view. The 20-day moving average is close to about 1,200, and there is a possibility that it is possible, it is probable that it might test 1,200. 1,200, if it sustains above that, then 1,260 would be the next target. But till such time it takes out 1,400 decisively, no sustainable fresh uptrend is likely. And there is a split that is waiting to happen. I think it's tomorrow or within this week, perhaps 2nd of November, 6-for-1 split is going to happen. So after that, maybe some small investors might chip in, but these new age companies, I'm slightly wary of these stocks.
Okay, do remember that Nykaa also posts its results tomorrow, so it'll be interesting to see how Q2 has looked for the company. And remember the record date, the 1:5 bonus is fixed for the 11th of November, so we're watching out for that as well. Vijay, coming to you on this, because you were talking about the new age companies, I want to get to you on Nykaa first. This is still one where people have spoken about the business model being slightly more supportive. It looks perhaps a little bit different from what a Paytm or PB FinTech would look like. But your call on Nykaa at these levels, and also for our caller, she's actually gotten into it pretty high at 1500.
Well, I would beg to differ, because the business model which Nykaa has, so many companies are doing the same. They're selling fashion products, so whether it's Myntra or even a Flipkart or even an Amazon, or there are several scores and scores of websites selling the same stuff, giving the same offers. So that is the reason why I am not, at all bullish on Nykaa. And look at the price to earning. Yeah. Any company has to, the earnings have to catch up. The price to earnings still is at 1255, which is whoppingly higher than where it should be. So Zomato, I said, because Zomato, the earnings are picking up, and again they are in a very niche space. The only competitor they have as of now is Swiggy. So there are only two players in the market. So Zomato has definitely an edge, and it's the only listed company. While there are lots and lots of companies, including Tata. Tata came up with a new Tata New app. So there are. It's a very cluttered market. So I don't think that Nykaa would go back to the levels where it got listed.
So do you think it's better to sort of book your losses and get out?
Absolutely. Sell on rise is the strategy.
All right, got it. Thanks a lot for taking us through Adani Power as well as Nykaa. The next one, we have Shailesh Vasudevan, who writes to us from Kanyakumari. He says he holds 7,000 shares of New India Assurance at 160 and 2,000 shares of GMDC bought at 201. So he wants to know what to do with both of his investments. Vijay, let me come to you first on this. Take us through your call on New India Assurance. Of course, the stock hasn't done so well this year. It's down around 35%. And also, looking within the insurance space, do you think that there's something else that you would prefer?
Well, yes, I think that there are lots of opportunities in the insurance space. While I like, HDFC Life and SBI Life a lot, if you talk particularly about the insurance space, but yes, New India Insurance is in the non-life space, and it is a different animal altogether. So it is related to the business. So this is a clear, signal that in the last few quarters business was not that great, and if at all business was not great, so people did not do their general insurances, and New India generally does a large ticket size, assurance. So I would say that, there is still a potential in the stock to go up to 100, 115 at the most. So sell as you get these levels. So I'm not very bullish on New India Insurance, particularly. I would say that, if somebody wants to be in the insurance space, so there are other private companies which give you a better option.
Which one would you pick within the insurance space, Vijay?
As I said that, HDFC Life I like LIC also at these levels is good.
Okay, got it. And what about GMDC? Because that is the other, holding. You says that they have 2,000 shares of GMDC bought at 201. Do you think this is a good one?
Yeah, I think that, I would like to speak about the metal space particularly, because, GMDC, NMDC, all these companies are primarily into mining, metals and mining. And we've seen a slowdown happening in China. China is the largest, consumer of metals across the world till date. And as the economic activity is slowing down in US and Europe, because, these countries, including India, China used to export a lot of metal to these countries. So we are seeing an overall slowdown in the world, in the global economy, in the global construction and the, infra space. So I would say that, the GMDC would trouble a bit, and keep a very strict stop loss on the trades of 130 and keep holding. I think that, if market supports, so there is a probability of it going back to 180 odd. Otherwise, keep a very strict stop loss.
All right, keep a strict stop loss on GMDC. Rajat as well as Vijay, I request you both to stay on. We have to take a quick commercial break, but we're going to be back in just 2 minutes, and we have lots of other queries lined up when we come back. Welcome back. You're still tuned into Your Stocks on CNBC TV18, and we still have Rajat as well as Vijay with us to answer all of your stock-related queries that you've written in to us with. So Jairaj Krishnan writes to us from Chennai. He says he holds 1,000 shares of BPCL. He bought them at 460 a piece, and he also has 200 shares of Paytm at around 1,600. Of course, he is making significant losses in Paytm. I think around 1.9 lakh of losses in Paytm. So he wants to know what to do with both of these counters. Rajat, let me come to you first on this one. Take us through both of these, BPCL as well as Paytm. Of course, like I pointed out, the losses that he's suffering in Paytm are quite significant. So he wants to know whether he should book his losses and get out, or, if he holds on for a little bit longer, could he, manage to trim those losses at least?
Well, I would like to take BPCL first. BPCL had a lot of promise. At one point of time, people were projecting much higher levels, divestment and so on. But BPCL has now has been on a downtrend, and it has come down to 301 as we talk. I would not suggest getting out of BPCL right now, because it is very close to its major support area, that is between 300 and 275. These levels have produced since 2019. These levels have produced significant corrective upswing. At least I would say that maybe similar situations might again occur, where it might scale up to something like 350 to about 375. 375 is its 200-day moving average. If it fails to cross in any significant upswing, fails to cross that level of 375, then definitely one should exit. Regarding Paytm, I would say that it's a problematic scenario. LIC and Paytm, will you ever make money? Maybe over a long period of time, but at least in the near term, nothing of the kind is seen on the weekly charts, on the daily charts. Although Zomato and Paytm the charts are somewhat similar, but I have at least more confidence in Zomato rather than Paytm, because Paytm, the bias is on the downside, while Zomato is trying to bounce back. So probably Zomato would do well, whereas Paytm, I would suggest him to get out of it. If there were to be any kind of a rally where it fails to take out 700, he should exit and choose some business which has got some strong earnings, so that you recover your money. I mean, don't bet on new age businesses. The new age businesses, see, everybody quotes Amazon. Amazon has AWS to back it up. AWS has got strong set of earnings to back it up, but I have not seen many such new age businesses coming up with any kind of significant earning stream. Even Zomato, for that matter, its losses are coming down. It isn't as if that it is actually making a great deal of money. I mean, none of them. So if you buy new age businesses, be certain that you are buying at low levels. Otherwise, you might actually lose money. I mean, I would not touch them with a barge pole.
All right, and unfortunately, our viewer has sort of invested in Paytm also at a very high price of around 1,600. Vijay, let me come to you. Do you concur with what Rajat is saying on both of these stocks?
Well, coming to Paytm first, and I mentioned earlier that the chances of making or recovering money in Paytm and Zomato are better than that in Nykaa. But again, I completely agree with Rajat sir that any day Zomato is better than Paytm. The reason is that Paytm did have the first mover advantage, but at that time it was not listed. Today it's a cluttered market. So you've got PayZapp, you've got so many options, Razor Pays of the world and whatnot. There are so many options available, which give a very tough competition to Paytm. And the revenues have to scale up. The banking operations which they talk about is doing and scaling up well. But again, banking again is a very, very, very cluttered market. So look at the small finance banks, look at other banks, they're already struggling with new accounts. So yes, I think that, it would be a tough road ahead for Paytm. They need to do a lot of soul searching. So stay invested with a stop loss. So for every trade nowadays, I'm suggesting a stop loss. So keep a stop loss of 600 in Paytm as well.
All right, stop loss of 600 in Paytm. Vijay, what about BPCL as well?
Yeah, so the reason why BPCL is not performing is that high crude prices, and the government has put a kind of a cap on increasing the petrol and the diesel prices. So this has not been left loose because the inflation pressure is so high, and there are other issues as well. So I think that until we see crude coming down, all these OMCs won't perform at all. So I think that again, a stop loss of 290 is recommended on BPCL, and keep on holding it. It is a great company, but yes, high crude prices can ruin the balance sheet.
All right, got it. That is the advice on Paytm as well as BPCL. Rajat as well as Vijay, we're going to leave it on that note. Thank you very much for joining us and taking our viewers through all of these queries and giving them some sane investment advice. But with that, we're going to wind down on this edition of Your Stocks. Remember, you can email us all of your queries, and then we will take them up with our experts. Stay tuned. Closing bell comes up next, and they're going to take you through the last hour of trade.